Hello folks, welcome back. So today I'm going to share with you the only ICT strategy that works every single day. So before going to the strategy, you have to understand two things. The market moves above old highs to take buy side and below all lows for sell side. So and also we have a run maybe to the upside because we have an inefficiency at a premium level, or to a downside where we have an inefficiency to a discount level. So our price would move up and down for liquidity or for inefficiencies. So you must understand that. And for this strategy to work, you must also have, it might not be daily the daily bias, but have a short-term bias that would be a magnet for price. So this strategy works every single day. If you look for it, it works every single day. So we have as you can see, this is the euro dollar. You only need a 15-minute chart for this strategy. So we had this today. So this is today's price action. As you can see, price is still moving. So first of all, your trading view should be set to the New York local time. So we always make sure that it is toggled on to the New York local time. So today we had quite a clear buy side that was taken right there. So we have to couple it. We have to have time being the number one factor, and then have price being the second factor. But also not what price is doing. So basically what price does is like the way we see a football match, whereby we have penalties, and when a goalkeeper is ready to catch that ball, is taken to the wrong side, and then the ball goes to the other side. So this is what always happens in these markets. So traders are being taken to the wrong side, and then it reverses on them. So as you can see, like right here, we went above this high right there. Now here time becomes the real deal. So we have to incorporate time as the number one factor. So you just don't go short because you've seen a move to the upside taking out the buy side, and then you assume that it's going to reverse. So time here must be the number one factor. So and also the way we determine the short-term bias is quite easy. So as you can see, while price was coming down right there, it did not take this low. That automatically tells you that we're only going up to go down. So it is not even a matter of thinking too hard of what price is about to do. So as you can see, we went up, took out that high right there, and then we moved to the downside. This would have been your first draw on liquidity. So maybe you take partials around that level. Then also we had a clear sell side that was below these lows, and also we had this fair value gap that will be act also as a magnet for price. So we had that. So here time is where we define between boys and men. So if you have time into your trading, then everything becomes super easy. So this is the London Open silver bullet. So as you can see, we had that run to the upside during the London Open, exactly at London Open. We had that, and then we had an aggressive move to the downside. So it is quite easy. If you see that on a 15-minute chart, you just head over to a 1-minute chart, and for the folks that have learned about the 2022 mentorship, this will be a nice one for them. So you just wait for, as you can see, there was quite a clear buy side that was residing above these highs. So you can ask, when is it the right time to trade? So you just wait, because this is even between the London Open kill zone. Yes, we had this run to the upside, but notice it did not take these highs. So you wait. So patience. So you wait, and then we had that during the London, but it was quite shallow. It went back up again, taking out those relative equal highs. Then we had here we had a fair value gap right there. So we also had this inversion fair value gap. So you can be going short inside these as prices moving to the downside below this inversion fair value gap, because now time is in play. So your short position will be placed right there. Your stop be placed just above that high. Your target is low. So that's 8.93 risk to reward. So as you can see, it is quite easy, and also you take partials around this low, trailing your stop to break even and waiting for price to hit your targets. And also, if you could have waited even longer, you can see we had this as our draw on liquidity right there. So we had that, would have used these lows right there. That would have been 22.7 our trade. So as you can see, it is quite simple, and it works every single day. So I'm going to show you yet another example using the 15-minute chart, and can go back test for the same. And so we're going to go to the previous day, which was yesterday. We had so you just look to the left and see what is to the left, and then you can use that as your entry. So we had these so we had as you can see, we had these fair value gap right there. So we had that. So you extend it through. Also could have used this or even this one, any of them. You see any of them, and then you are trading inside that area during the London Open kill zone, then it might yield something. So we had this. So here we had this. Delete this. Right there. So this was exactly during London Open. So he had that. So But prior to that, this would have also been a good trade, because there was sell side below these lows, it got taken out. Then we had this run to the upside, taking out this high. So this would have been a trade, and also this would have been a trade. So we had that. So if we head over to the 1 minute chart, it is quite simple. Go to the 15, find something, then head over to the 1 minute chart. So as you can see, we had this came down, took out these lows right there. Then we had a shift to the upside. So we had this inversion fair value gap extended through, as this candle was digging inside the inversion fair value gap right there. That could have been your entry right there, aiming for the highs right there. Just place your stop just below those lows and placing our targets right there. So that would have been a 5.44 trade. That is during the London Open. So he also had this run to the upside right there. We had this liquidity void. We had these, let me delete this. We had this fair value gap right there. We had also taken out sell side, trading inside the inversion fair value gap right there. Notice the candle close was below, outside the inversion fair value gap. So we had this, we had a move to the upside right there. So this would have been your entry right here. What could you be aiming for? Your stop be placed right above that high, and then you aim for this low right there. And as you can see, target was hit, going into break even below these. After these lows, this low was taken out right there. As you can see, you should be at break even, partials into this fair value gap, partials, and then holding if you would like to hold. Then we had this aggressive run to the downside. So that's it. It works every single day, provided you have time being your number one factor. So it is time and then price. So as you can see, this price keeps on changing, but the time remains constant. So the time that London opens will remain constant, but the price will change. It will ever be changing. So time is the one factor that never changes. So we have time being our number one factor, and which time differentiates between boys and men. So I guess that's it. Backtest on that, and I guarantee it's gonna make you something if you backtest on that. That is only during the London Open. So during London we have awesome trades. During London there are very awesome trades. So as you can see right here, we came, took out this high, we had this inefficiency, we had this inversion fair value gap right there, we traded above that high, then we had this run to the downside. There was quite a clear sell side that was residing below these lows. Also right here we had this, yes, we had that run, came, took out this low, and then aggressive move to the downside, to the upside, taking out these highs right there. Also these would be a good trade to the downside, and Yeah, so as you can see, it works. It works during most of the time during the London Open key zone. As you can see here, went, took this buy side right there, came down, took out this low right there, and then we had this aggressive move to the upside. So it goes on and on, as you can see. So sometimes it might not happen in the pair that you're trading, but it always happens. So but mostly, if you take a look at euro, take a look at pound USD, it always happens. So I guess that's it for today, and until I talk to you next time, be safe.